My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you make some money. My job is not just to entertain you, but to educate, teach, put this whole thing in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Ever since last Friday, when Fed Chairman Jay Powell decided to ratchet up the rhetoric in his war on inflation, he's been pilloried for everything, including many things he has no control over whatsoever, like the trillions of dollars in spending that Congress has decided to authorize with good motives, but bad timing. Maybe that's part of the reason why the averages just keep getting hit. The Dow falling 280 points, S&P declining 0.78%. Nasdaq actually edging down 0.56% at one point, much uglier. But I got to tell you, it is
the house of pain
out there. Now, there's a lot of good stuff in those spending bills. It's just that our overheated economy can't handle such a big influx of cash. But even members of the Black Lung No Rainbow Coalition have found things to like in the climate bill, almost facetiously dubbed the Inflation Reduction Act. Everyone knows our tunnels and bridges need some massive upgrades, too, and we desperately need to build up domestic semiconductor manufacturing. Unfortunately, all this spending makes Powell's job a lot more difficult. He can't control Congress. He can't authorize more immigration, which would solve the labor shortage, because remember, it is a shortage of people that need to fill jobs. We don't have them. Now, I was hoping if the market got hit hard enough, we could have a December 2018 moment where Powell stopped his aggressive rate hikes after he realized that inflation was under control. But this is not 2018. Sure, we're enjoying a major collapse in so many important commodities. There's more availability for pretty much everything, and the only real sticking point these days comes down to parts stuck in China or labor shortages that were hard to see coming or certain spikes in periodic price in oil. Powell's making real progress, but he's still got a long way to go. Yet I keep hearing that Powell is so far behind the curve that he now has to throw us into a nasty recession in order to beat inflation. The bears won't stop raising. They say he has to raise interest rates 4 to 5%, and they think it's all his fault. If he'd acted earlier, maybe he wouldn't have to bring the pain right now. To me, that's a total false narrative. I think these guys are missing the point entirely. That's why tonight I want to walk you through Jay's secret playbook, or at least my interpretation of a secret playbook, because I don't think he really has them. So you know where we need to see before he'll stop tightening. Maybe just consider this to be Cramer's version if he were Powell. That way it's maybe softer and nicer to Powell. Parents, I want you to hold your children's ears. This is a little too graphic. It needs one of those disclaimers, like those who can't handle the word layoffs should turn off their TV set. There are a lot of trigger words coming. First off, Powell's most worried about wage inflation because it spreads to the whole economy like wildfire. And that means he wants to see an end to the incessant job hopping. Job hopping is really the operative term here. How does he do that? People will stop job hopping once they start fearing that they won't be able to find a new job to hop to. In other words, he needs companies to lay off their workers or even go under to cool down the labor market. So why don't we take an example? Let me pick one. I don't know. Anybody have one? Hey, how about Bed Bath & Beyond? Take that one, please. Bed Bath has tens of thousands of employees and not enough cash to pay them or their suppliers without aggressive capital raises that could really hurt the stock. So they are now selling stock at the market to raise cash. Stock, by the way, that they bought back at much higher prices. Isn't capitalism grand? Now, these guys know there are legions of ill-advised investors, the meme freaks or apes, as they call themselves, and they will keep buying the stock because they don't know anything, and that Bed Bath is selling it. It's selling the stock in order to crush the short sellers, which is all they really care about. That's the only thing propping this business up. I enjoy the battle, even as I think that most memesters proudly don't know how to read a balance sheet. Ignorance is so blissful with them. Don't you love it? From Jay Powell's perspective, he needs outfits like Bed Bath to fail. No more at-the-money sale of stocks. No more memesters propping things up. In fact, he wants pretty much anyone with a retail job to be worried that their employer might be the next failure. He needs the excess merchandise at Bed Bath to flood the zone and cause a glut that will hurt the rest of the industry. Powell can't be this direct, though. But when he walks through the shopping mall, he wants to see not help wanted signs, but for rent signs. And, he wants like the craft paper they put, in the malls when the store goes under. Or how about, we'll build the suit. I always love that. Like, to suit what? I mean, I'm a 40 regular. Boy, that would sure signal the end of this madness, though. We should create a Potemkin Mall and have them stroll through it. Now, as the son of a mother who sold lingerie by the way, on the 7th floor at the defunct Lit Brothers, and a father who sold gabardines, that's a form of pants, at the failed Gimbels, I know how fragile these retail stores can be. You can get a real domino effect when one of these guys goes under. Same thing with restaurants. Powell needs a big one to, I don't know, about sink? I don't know. Of course, I can't think of a publicly traded restaurant that's as poorly run as Bed Bath & Beyond. That is the benchmark for mismanagement, rivaled only by, say, JCPenney. That said, there's nothing like one of these new vacant Bed Bath locations to drag down a whole strip mall. It's the easiest way for Powell to beat inflation, even as the memesters may pull an AMC and keep Bed Bath in business for longer than it deserves. Second thing that would help Powell beat inflation, even if he never can admit to it out loud, he needs a fintech to collapse, for heaven's sake. Ideally, one of them buy now, pay later places. We call that, what do we call that? Buy now, don't pay, that kind of thing. It's so funny. Maybe one with a Bitcoin kicker. Talk about two birds with one stone. Hey, by the way, I got a lot of people came to me, and they're buying Golem and selling old Golem. They're doing an arbitrage, and Golem arbitrage. Anyway, those are names of cryptos. Anyway, these buy now, pay later companies think that they have the ability to lend with impunity, and Powell needs that impunity to go away. Now, it may take a scandal before this can happen, or maybe it'll just take a spike of bad loans, but the reverberations would be enormous and, unfortunately, positive. These pseudo-banks are a thorn in the side of the Fed. Fintech collapse. Hey, while we're at it, I'm sure Powell would love to see an end to the creation of new cryptocurrencies like the ones I just mentioned. They're often paired with transparent pump and dump schemes that the SEC seems to like. They're not doing much about it because they embody, caveat emptor, because they embody the kind of reckless gambling that's a telltale of a sign of an overheated economy. Financial thuggery, it must end. This is a no thuggery zone. Third, let's face it, Powell needs a chain of SPACs and non-public venture capital firms to go belly up. The former's already happening, but they're still pumping these things out. Some outfit SPAC this morning over at the NASDAQ, and I was like, SPAC. And I thought of P.T. Barnum immediately. Hey, that would be good, PTB. We've had an endless job hopping in Silicon Valley. It's time for these startups to have down rounds or run out of funding entirely. That would be immense help to Powell. Tailor-made, better with the ham. That's a Jersey thing. Fourth, Powell has to have some high-profile financiers run out of money, causing a chain reaction of fear that expensive trinkets from 140-foot yachts, which, by the way, have 5 bedrooms, to $5 million homes, because they suddenly will be worth less. Nothing like expensive stuff that you can't sell to stir the pot of panic from everyone else who'll rush the exits. You won't be worried about the cost of rent once those dominoes fall. Don't forget, so much of this stuff has been bought with borrowed money that you'll see the banks pulling their horns, and you won't be all that worried about lower loan growth. Finally, Powell's waiting for the pain from all the double ordering in this country to kick in. Back when we had the shortage all over the place, tons of companies double ordered important goods to ensure they'd have enough supply. Right now, for instance, the automakers are still scrambling for double ordered chips. But by the time they get those chips, potential car buyers will be too scared to buy or lease. Then the price in the car lot goes down and the price of the used car goes down. And the next thing you know, inflation subsides. I got a call the other day from someone who wanted to know why Taiwan semi-stock wasn't doing better given all the orders it has. I had to let him in on the reason. Semiconductor foundries are actually an awful business. That's why we stopped manufacturing chips in this country. I think you'll find out real soon when demand starts falling off why the foundries keep pumping out new chips. Here's the bottom line. We're now in good news is bad news mode because the Fed's not going to stop bringing the pain until we see real deterioration. And this is my checklist, okay, in the economy, and a very different landscape from the mall to the store to the house to the yacht and the car lots. It's all got to change. And as the late, great Sam Cooke assured us, change is going to come. Joe in New Jersey. Joe.
Hello, Mr. Cramer. Thank you for taking my call.
Quite welcome.
I sold Canada Goose back in January on your recommendation and took some nice profits. It's trading at around the mid-$18 level a share. Can I buy it back at this level heading into the fall?
No. No, not at all. I mean, not even a chance. Actually, I don't want anyone buying anything that has to do with clothes unless they're putting them on themselves. That's my new rule right here, right now. I just said it. If you're going to buy clothes, make sure you can wear them. Ba-dum-bum. Do I have time for another question? That's it? We're now in good news is bad news mode because the Fed's not going to stop bringing in pain until we see real deterioration in the economy. As Sam Cooke said, a change is going to come. Mad Money tonight, you called in and you stopped me on What's Go. So I'm turning in my homework on the HVAC company to see if I can create an enticing buying opportunity. Then I become a big believer in the rise of the liquefied natural gas exports. What's the best way to play this long-term trend that's really making money right now? I'm going to give you a few names that I'm watching. And CrowdStrike fell today after fantastic earnings. But is the move really justified? I'm going to get the latest from the company's top brass, so you stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.